Hey guys, it's Chris Wong. I'm filming this video as of October 5th, 2025, and I'd like to talk about why I decided to withdraw some cash out of my margin account on a regular basis in order to try to build an emergency fund again. So as a disclaimer, I'm not a financial advisor. I'm just a guy interested in building a portfolio and trying to achieve financial independence and retire early. So in my previous videos, I talked about how I started having a shopping problem again for buying ETFs, and I kept telling myself that I have to use less margin and have a higher percentage of equity relative to the total assets. But I still kept buying on dips. So even though I kept buying on dips, it's hard to predict if the market's going to crash again or when it's going to crash. And it's hard to predict how much higher it's going to be. Even though the long term of the market is to go up in the long term, along the way of going up, it's going to have its crashes, it's going to have recessions. It's hard to predict if it's going to be 10 days, 3 months, a year, 2 years. I tried to build up an emergency fund solely. I didn't want to do a lump sum withdrawal out of my margin account. I'm still tempted for opportunities in case there's a dips, or if I see something that's undervalued, then I want to buy it. I have investments with Canadian ETF providers and US ETF providers. So I'm getting dividend income in Canadian dollars and US dollars. So I invest in products by Hamilton ETFs, Harvest Portfolios, Purpose ETFs, Evolve. For the US side, I invest with Yield Max, Defiance ETFs, Round Hill, and I also invest with Granite shares. So the way I set my portfolio is to make sure I get paid dividends on a regular basis. So my Canadian ETFs pay me dividends on a monthly basis, and the newer ones are paying me on a bi-weekly basis. So for example, I just started a position in BIGY and CANY by Evolve ETFs, and going forward I may concentrate on trying to add more shares. And with the US listed holding ones, I set my portfolio in a way that I'm earning dividend income every day, Monday to Fridays. So the amounts are different each day, but my biggest payouts are Tuesdays and Fridays from Granite shares, Yield Max, Defiance, and Round Hill. So I had several margin calls last April, and I didn't have enough cash put aside to avoid selling shares at a loss to settle margin call. So I actually decided this time I'm going to protect myself better. So since I felt tempted to keep buying stocks on margin because the money was in the account, or the margin buying power available was in the account, I feel like I'm gonna have to take it out of my account. And one of the other reasons why I decided to take it out of my account and build an emergency fund outside Wealthsimple or outside of Questrade, it's hard to predict what could happen to your accounts, or it's hard to predict if your account gets hacked and you cannot use your account for several days. I'm trying to rebuild an emergency fund after using it up, just in the event something happens. So let's say I find out I cannot access my account for several days just because someone hacked into my account. Or let's say market crashes again and I gotta spend several days trying to settle a margin call. The emergency fund that I'm trying to rebuild at least will cover the month's expense. So I'm trying to rebuild emergency fund to pay for at least 1 month of expenses. YouTubers say emergency fund is not needed if you have a certain portfolio. Some YouTubers say $1,000 or $2,000 to get started, and some will say have an emergency fund for 6 months or 1 year. But for me, because I keep earning dividend income no matter what happens in the market, I think 1 month is enough for me and my wife. For me and my wife, because we both work full time, I think 1 month of an emergency fund is enough in case something happens. Now, whether that's correct or not, everyone is different. Everyone has different safety net or different risk tolerance. I like to invest, but I also don't want to lose money on the margin call. I actually thought about taking a bigger amounts of cash out of my margin account, but then I didn't want my interest to be charged too high relative to my dividend income, trying to pay down the margin. And I also didn't want to miss opportunities as well. So I decided to just make it a habit going forward to just withdraw a few dollars at least a couple times a week, just put into a bank account to build up the emergency fund first, and then after the emergency fund is built, then I may consider building another savings for a new computer. And after buying a computer, I may consider building a third pot, one for like opportunities, or one for additional emergency for settling margin calls or selling any other expenses on top of the emergency fund of the 1 month expense. In the future, when I do succeed in trying to achieve financial independence, retire early, I don't know how many years it's going to take. I would want a bigger emergency fund, because if I don't have a job to back me up and I'm not comfortable trying to run a business and trying to earn income from selling products and services, then I will want to have a bigger emergency fund in case something happens to my brokerage accounts, or in case I made a mistake investing with margin while on financial independence, retire early. The intention for the emergency fund, whether the one I'm trying to build now or in the future, the intention is not to earn income on it. So I don't care if the interest rate is high or low on it. It's just there to back me up. It's not there to buy TV. It's not there to buy anything I don't need. I'm still going to try and make it a goal as of right now. Dividend income and work money. And in the future, when I do finally achieve financial independence, retire early, is just to live off of dividend income and margin. I hope you guys liked the video. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.